Welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thanks for joining us if you're just joining us, or thank you for being with us all day if you've been with us all day. Let's kind of jump in and take a look at these prices because these markets are absolutely going to be your money, right? Let's take a look at what's corn been doing today. As I came in this morning earlier, it was up about 2 or 3 cents. Now we're lower. Deese is lower by 2 3/4 at 5.35 1/4. March is also lower by 3 cents. All right, how about soybeans? Do we have any better news over there? We do. 9.5 cents higher in that Nove contract. 12.30 is last. Jan's up 9 1/4 cents at 12.40. Moving right along to that Chicago wheat. Wheat was doing okay too. Just a little bit better on the day. December's up 1 1/4 cents at 7.57 1/4. While March is up at 7.69 1/4, which is up 1 3/4 cents. How about the hard red wheat in Kansas City? Let's go to Kansas City. This board's got something for everybody, doesn't it? December's up 1/4 at 7.74 1/4. March is sharply unchanged at 7.76 1/2. May's up a penny, but we do have the deferreds, July and Sep, off 3/4 and 1 1/4 cent, respectively. All right, moving right along to the Minneapolis contract. That spring wheat in Minneapolis is up 7 1/4 cents in the Deese. That's 10.20 1/4 last. March is up 8 cents behind it, 9.96 1/2. All right, then let's lastly look at this cotton. Cotton's been all over the shop as of late. We're off 44 points at 107.82. We've had a pretty good range again over there, 2.5 cents today. All right, let's bring in our guest analyst, Todd Horowitz from Bubba Trading. I believe Todd's in Chicago. Good morning, Todd.
Good morning, Scott. How are you, babe?
I'm good. All right, so let's go over a few things. Number one, the Merck's got a fertilizer contract, but there's no volume in it. So we've got to worry about fertilizer, but we probably have to do it through other things, and that's why we talk about nat gas and crude oil, because you can synthetically hedge a little bit, I suppose, in those contracts, something that we have to look at. And we're also talking about maybe because of that, losing acres in corn. I've read over the weekend up to maybe, say, 5 million acres of corn over to beans. What are your thoughts on those things? We've got inflation, we've got fertilizer prices, and we've got some switching.
Well, I think that, we do hedge, through heating oil as well is another way to use, another product that, that creates the distillate. So I think that's fine, and that's what we should always be doing. But we've got runaway inflation, Scott, and nobody wants to recognize it. And that's the bigger problem when you look at the overall market. And of course, the stock markets ignore it totally as they continue to run higher to try to keep up with inflation. But you go to any store. I bought a dozen bagels yesterday. They're up 12% from the last time I was there. But nobody wants to recognize this. It's going to create some switching, some shortages, and of course there'll be an overabundance in one crop and not enough of another, and that could create some price fluctuation. But I think you should always figure out ways to protect your downside risk, whether it's for input or output.
I set myself up for the negative comments, which is fine. I've got thick skin. But Thursday night we went shopping, my wife and I, at the grocery store, and we only bought 3 bottles of red wine as far as alcohol goes. But for 2 people in their mid to late 50s, the grocery bill was $500. Now, yes, I can eat.
Yeah, I know.
All those jokes aside, I get it. Funny. I got destroyed on Twitter. But still, regardless of how much I can eat, for 2 people that age and a $500 grocery bill, that'll give you an idea. That grocery bill a little 6 months ago, maybe 10 months ago, was $350. You know what I mean?
Well, take a look here. Perfect example, Texas, right? Texas last year, 1 year ago in Texas, gasoline was $1.49 a gallon at Costco. Yesterday, gasoline was $2.97 at Costco for the same gasoline. So again, we've created this mess, and there's big problems everywhere. And this is going to run its way down the chain, the supply chain, as we go forward.
All right, hold that supply chain thought. We're going to go away, pay some bills. We'll come back after this and talk livestock with Bubba Horowitz, Todd in Chicago. Welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy, and I haven't used it yet today, but I'm going to use it now as a cheap segue into this live cattle market. We had a decent report on Friday, so we've got a little bit of a bump today. Let's take a look at that live cattle market. Up, say, $1.45 in that Deese contract, 129.77 last. Not bad going. Feb's up $1.42 at 134.92. Feeders are on the same wavelength, I believe. Yes, we've got November up $1.85 at 158.75. Jan's up $1.57 to 158.90. And last we checked, lean hogs were trying to squeeze out a gain here. They've turned over a little bit more, more mixed. 92 cents higher in D at 74.25. Feb's up 17 cents at 76.80, but we do start to lose some ground when we get to April. All right, let's bring back in Todd Horowitz from Bubba Trading in Chicago. Todd's an old friend of the show, friend of mine. All right, Todd, we kind of went away talking about something that we're going to be talking about here for the next year. Here's my question to you. Let's just say we wave the magic wand and we sort out the supply chain issues right now. How much of these new price levels are here to stay? That's the question.
100%, maybe more. It doesn't matter. That is not affecting price. What's affecting price is the overwhelming debt that we continue to create, the whole system of which we've created into new pricing. And of course, you know that when you go to most retail stores, they don't reduce their prices. They only know how to hike them higher. The only place that does move up and down a little bit is gasoline. But every other thing we buy, once they raise them, they never come down. So you better get used to paying much higher prices. And of course, if they get any of these ridiculous bills passed for $3.5 or $2.5 trillion, it's only going to be more because you got to finance that somewhere, and it can only be through higher costs and higher taxes. These companies are not going to foot the bill. They're going to put the bill on the consumer as always, and that's where the real problems lie.
And to fight these problems, they're going to be having to raise interest rates to fight inflation. I think that's what they're ultimately going to do. At least that's what they're saying they're going to do. And what's that going to do to the dollar, and what's that going to do to our exports? I mean, you don't have to really be a brain surgeon to figure out that, you know, that line of thinking that when we raise these interest rates, it's going to strengthen the dollar, and it's going to make our goods and services to those overseas more expensive. So that's going to hurt our exports. So we're in a situation here which I've never seen before, Todd. I mean, look, we've got the San Francisco Fed saying, you know, that inflation is eye-poppingly high, and at the same time, the Atlanta Fed downgrading our growth. Sounds to me like we're in a little bit of trouble. All right, we're going to have to cut on that one. All right, thank you very much. That's Todd Horowitz from Bubba Trading in Chicago. I'm Scott Shelby in Nashville, and I'm going to hand this back over to Tammy.